Let's move on, and let's also welcome on board Sandip Sabharwal as well as Chandan Taparia joining us on the show right now. Hi, very good morning, gentlemen, and thank you so much for your time. Sandip, firstly, let me have your take on the markets because it's been a great rally in the last truncated week that we have seen. The FII is making a comeback. The earnings, especially for the banking majors, were actually great, and we are looking forward to an all-time high levels coming in for Nifty Bank. How do you read into the Indian markets move right now, and do you believe that in the last trading week or the expiry week of this particular series, this uptrend will continue at least in the near term?
So we are seeing somewhat of a decoupling of many markets from the US markets lately, where US, because of the expected slowdown in economic growth due to the tariff uncertainties, the way the US dollar has been moving, etc., the markets have not been doing well. And I think there's a reset happening globally, and India is a part of that. On top of that, in India, the macro data continues to be reasonably good, both in terms of inflation, expected growth rates for this year, and company results. Uh, right now, a majority of large IT companies have reported, and some large banks have reported. So, bank results, like you rightly said, have been very encouraging. The best part about banks is that they have handled the entire tightening cycle very well in terms of managing NPAs on their books. So, as the easing cycle plays out, and because the book quality remains good, we'll see better credit growth, although margins get hit in the short term as the rate cycle starts, but they adjust over the longer term. So I think banks are pretty well placed. And as the result season plays out, we'll see more data points. But I think this quarter result expectations in any case were lower. Overall, financial year 25-26, the outlook still remains positive.
Right, Sandeep. Let's talk about then the rest of the markets and the sectors that we have right now at hand. Yes, the banks are the one that have been outperforming, but apart from banks, you have real estate space also. That's been a surprise mover of late, seeing extremely good strength in the market. What's your take on the real estate space, and is that a domain that you would like to look at right now?
The real estate overall, I'm cautious because we've had a few years of very aggressive growth, and now all data points indicate that growth seems to be stalling, at least on the residential side. And a majority of the business from most of the large real estate companies, except for very few, comes from that segment. So I think after this long phase of performance, where the real estate sector actually kept on outperforming even if the markets did not do well and many other sectors did not do well. I think we need to go through a phase of long consolidation. So I would think that for this year at least, I would be cautious on real estate and only be looking to buy them on some reasonable corrections.
In fact, Prestige has actually seen a downtick in its pre-sales. So, of course, they had 4 new launches as well. The total GDV potential is about almost 160 billion rupees. But that said, the pre-sales was higher than what most brokerages were anticipating, but at an industry level, it's not that impressive. And given that, most of these players are no more regional players, and most of these players are now pretty much pan-India and eating into each other's regions, let's see if this is a trend to be followed by others or not. But Chandan Taparia too is on the show with us. Chandan, hi, morning. I guess it's going to be all about banks this morning, just to whisker away from that all-time high. That said, do you think it makes sense to add positions to any of the banking counters, and in specific ICICI Bank and HDFC Bank, even though they're sitting at 52-week highs?
Good morning. Thanks for having me. So we have seen a tremendous rally in the Bank Nifty index. It really dwelled from 49,150 to 54,400 in last 7 trading sessions. So rally of around 5,000 points. We have seen a strong outperformance, and Bank Nifty is now heading towards its lifetime high. The lifetime high for the index is at 54,467, and we are just 150 points away from the same. So I believe that momentum could continue. And as of now, till it holds above 53,750, any small decline could be bought for an upside target towards 55,000 in the Bank Nifty. Now, looking at the stocks in banking, I believe Axis Bank and ICICI Bank could outperform apart from financial like Bajaj Finance and Finserv. So first to talk about Axis Bank, we have seen a decent run up in the counter. It really dwelled by more than 10 to 12% in the last week. And setup is clearly on the positive side after surpassing its falling supply trend line. So with support of 1170, Axis Bank has potential to rally towards 1230, 1235 levels. Talking about ICICI Bank, here also we have seen a fresh breakout, a positive price pattern with formation of high tops, high bottom on the lower time frame indicate positive momentum could continue. We have seen unwinding in 1400 calls. So because of that, 1385 could act as a support for an upside target towards 1450, 1470. So ICICI Bank, Axis Bank, and HDFC Bank are likely to take a lead to take the bank nifty towards 55,000 and beyond. And I believe the entire BFSI segment is likely to outperform the market as well.
Sandeep, before I talk about Infosys, I want to talk about a niche play like Tata LXC because those numbers are a little alarming. There's been a sharp miss led by, of course, the auto tariff uncertainty. And I'm just wondering if this is what Tata LXC is reported, what does it really spell for some of those, globally facing auto majors? Case in point being Tata Motors.
See, Tata Motors, like IT and Tata Motors, I think correlation is very low. So I would think that Tata Motors, it's more about what happens to the US UK sort of bilateral trade pact and how that plays out, and the competitiveness of overseas players vis-a-vis domestic players in the US market, because US is a big market. So I think there the impact will continue because the auto tariffs are unlikely to go away. But as far as niche players in IT are concerned, I think your observation is right. So what will happen is that last couple of years, while we saw the large cap IT companies largely underperform, some of the smaller companies with niche plays continue to do much better. Now the risk for those companies might be even greater because one client de-engagement or one or two project ramp-ups can hurt the relatively mid-sized IT companies much more than the larger companies who have a much more diversified client base. So I think, and the valuations of many of those mid-cap IT companies still are at a premium to, let's say, Infosys or TCS and much more than Wipro, HCL Tech. So I think that's the segment investors need to be more cautious about.
But Sandeep, I mean, traditionally, one has seen that, IT stocks bottom out before their earnings. And if you were to just, sort of stack up the last 10-year examples, where do you think IT stocks are going to actually bottom out? Is the negative already baked into the price? And these are stocks which have already fallen 30 to 35 odd % from their 52-week peaks. Or would you say that it's too early to make a case for them bottoming out? Right now, perhaps maybe more a case of at least the fall stalling here.
Yeah, so I would think fall stalling would be a bigger probability, especially if the market continues to do well. Now, there are two things here. The macro environment will continue to deteriorate, while the management commentaries, if you actually hear TCS or Infosys or the other companies, still continues to be reasonably positive in the context of the significant macro uncertainties. So I think what will turn out to be true is something we need to see whether the positiveness of these IT companies will actually play out or the macros will hurt them more. So I would think that by the next quarterly results, we'll have greater clarity. And unless and until something drastically changes on the tariffs front or ebbing of the global issues, I don't think that we'll see any significant rally in IT stocks, at least till the next results season.
So that's about the IT space. In fact, Chandan, let me come to you with the same question about the IT pack. And on the charts, if you have to look at the IT space, given the fact that we've seen significant correction coming in for almost the entire sector, would you now look at some of these large cap IT plays, or would you also tilt towards the mid-tier companies?
So Nifty IT is down by around 23% YTD basis in last 3.5, 4 months. We are witnessing lower top, lower bottom. However, most of the IT stocks and IT index has gone into the oversold territory, but as of now, the momentum and the follow-up buying is missing. However, market has seen the decent run-up led by buying in BFSI and selective auto or heavyweights, but IT is not performing comparatively. But again, I believe one need to go for some bargain buying. In fee, I'll wait for more decline towards 1320 to 1350 to go for any kind of bottom facing approach. TCS is also finding the kept upside because of the sustained call writing. So if I have to pick the name from IT space, I'll go with selective mid-cap name. I can go with the counter like persistent system with the view that if recovery happens, here recovery will be fast led by short covering. So with support of 4700, it can bounce towards 5300 kind of level. But we'll be very selective on the Nifty IT because comparatively upside seems to be kept with slightly underperformance if I look at the relative rotation graph of the technical setup.
All right, so be very selective when it comes to the IT space. But other than that, today, Divi's Lab will also be one of the counters to be in focus as the company has entered into a long-term international manufacturing and supply agreement with the global pharma company. No upfront payment is involved, but the deal is expected to contribute significantly in its revenue. And the company has also announced an estimated investment between 650 to 700 crores. Definitely a positive announcement coming through for Divi's Lab. But Chandan, when we look at the technical setup or the chart of this stock, it has been making lower lows for itself. How do you see Divi's Lab on the charts, as well as do you believe that this trend will come to an end anytime soon? What's your analysis?
So it got stuck in a range from last almost 28-30 weeks. Resistance are slightly shifting lower, but supports are intact. So has been moving in a broader range from last couple of weeks, and I believe a range-bound bias could be there. If I look at the IT and the pharma, both the sector are comparatively not performing because of the global indices and comment from the Trumps and all. So I believe we have to be very selective here. But yes, if I look at the Divi's Lab, some sort of recovery could be there. However, on the last trading session, it formed a bearish candle, failed to surpass its 50-day mark. But at the same time, 500 could provide as a support. So buy on decline near 5500 could be the stance to witness some recovery towards 6000 marks in the counter.
Sandeep, lastly, I wanted to get your view when it comes to the power sector. How are you viewing this space? Is it okay? I believe Sandeep has logged out. Let me take this question to you, Chandan. Then, what's your take coming into the power space? How is it looking to you? Because when you saw the markets rally, it was the power sector also that actually was the one that outperformed much faster.
So if I look at the Nifty power or Nifty energy sector, somehow we are witnessing the sign of the double bottom after the corrective move of last 7-8 months. We have seen a decent recovery, and a small follow-up can take the index up by around 5 to 8%. If I go with the specific name to explore the price setup of REC, PFC or Power Grid NTPC, I believe most of the counters are witnessing the sign of bottom out approach or early sign of the double bottom kind of approach. So I think one can go with selective power companies. To go with the specific name, I think Power Grid could be the one idea in the power space, which has taken supported 282 zone with hold of 50-day exponential moving average. It managed to surpass or hold 300 marks. So 300 could act as a support for a recovery towards 325.
Okay, so give us some other stock ideas that you're working with, Chandan, other than, of course, Power Grid.
Yeah, so I'll focus on two names. First will be buy on SBI card. In last few days, we have noticed buying interest in selective the insurance or the credit companies or card companies. And SBI is one of the strongest counter which has surpassed its multiple hurdle of 878.80 zone. It has seen a decent recovery and now quoting at multiple months high. So momentum could continue going forward with support of 884. SBI card can head towards 950 level. Second trading area that will be buy on Bajaj Finserv. This stock has really done well in last couple of months and now heading towards its new lifetime high after the long consolidation of last 4.5-5 weeks. Earlier it was finding hurdle at 2000 marks, but now a decisive hold about 2000 could attract the fresh buying interest. So if market has to hold, I think Bajaj Twins or Bajaj Finserv has to contribute a lot. So with support of 1930, Bajaj Finserv can head towards 21 kind of level.
Okay, interesting stock ideas there.